Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a couple of my trade in a very popular momentum stock, Sunrun, in the renewable space. So with that, let's go to that right away. And as you could see, my trades are on the right. And whereas my trades should have been in this area right here. And I think that for me personally, this is probably the biggest mistake. Even though I was stocking, renewable stocks in this area right here, I kind of missed at least Sunrun for sure. I had some other positions, but not extensive positions, not overweight positions in the theme that was just growing so fast. And specifically, I mean, we'll discuss with France this area right here, but to me, specifically this bar that was missed a lot. So I'm going to talk about this, and then we'll go to France and we'll talk about other trades. So what does this bar represent to you guys when as you watch this and as you think about this bar? And obviously, it's much easier to think about this in retrospect, thinking, seeing what has happened. But we need to extract some kind of value from the mistake, right? So even if you have not had a trade, like myself here, you could make a mistake of not having a trade in the specific stock, especially if everything is by the rules. So for instance, we had phase C into COVID low. We had kind of like this grinding feather, bullish feather, where supply and demand are low, and yet the price going up to the resistance. And we study this pattern, WTC1, it's called the bullish feather. And then we know that the bullish feather is going to resolve itself in the increased momentum. And here it is, the initial momentum phase. And usually that will be associated with a lot of demand. So I think it's just the mistake here not recognizing this increase of the momentum will increase the duration of the upswing. And therefore, you still have enough room for a trade even at this point. And another observation that is so important here, I think, is the volume signature itself. When we look into the area of the bullish feather, we're seeing, well, I don't know, maybe like 1, 2, 3, 4, 5, 6 times 6 the volume. What does it tell us about institutional character of buying? Urgent buying. And usually urgent buying is going to produce the rally that's going to extend. So that's kind of like the mistake that I'm repeating here, going through this analysis. This is where I need to give up my, like emotional hiccups here at this point and allow myself to participate in the move like this, rather than come back. And you could still do this. This is still a good trade. I mean, it is within the context of the structure here, but a better trade was here. And one more thing on that big bar, on this bar. So we usually would say that the volume spike will produce availability of both demand and supply. So supply increase usually will signify stop in action, possible reversal, change of behavior, potential trading range. Unless you have something like this, where the testing of this bar and the testing of the supply shows a lot of bullishness. Bullishness in the way how the price reacts to that supply coming in. So for instance, if we have a gap up day like this, and then the price goes down like this. So this is much more bearish than what has happened here as the price holds. And then secondly, look at the volume signature of the supply on that test. And it's definitely showing that supply dries up. So this was a really great opportunity to get into the position after you miss the gap or after you miss the original signal. And I think, to me, for these two trades, this is the biggest mistake, not actually what has happened here. Well, with that, Franz, well, let's talk about, these two trades now. So what do you see here?
Okay. Could we just go back for a second
Yeah.
to revisit what you were talking about? It's very interesting that with this bullish feather behavior, the sudden involvement clearly by institutions is almost like they're saying, okay, we see what's going on here. We see that there's not enough supply available, and suddenly something else changes, whatever the backdrop is that causes them to pile into this in early July. It's almost like a flashcard for vertical absorption.
Mm-hmm.
And then what you pointed out afterwards, after this volume spike, the immediate decline in volume, which signifies there's really not supply available. And I think there are definitely some takeaways from this. Every setup is different, but I think there's enough commonality between this and the same situation as it will develop at some point in the future, that we should just kind of put this in a filing cabinet drawer in the back of our head in terms of useful structure to remember, to to take advantage of.
Absolutely. So let's talk about the actual trades. I mean, like, there are 3 trades on this chart. The trade that never happened, and the 2 trades that have happened. So, Franz, what are your thoughts on the first trade?
Okay. Well, the first trade, we've got a buying climax that occurs in early October, that then results in a change of behavior that brings us into a trading range. And I think your entry in the trading range, because what happens during the trading range is that we see that supply between November and early December is being absorbed. It's just supply signature is going down, and yet look at the higher high that we're getting. So we're just seeing that that's probably phase C right there where you got in. So I think the entry is really nice. There's a little volatility, but then a nice move up and out. I'm kind of interested in what you saw at your initial exit and what your intention was with this, whether you were thinking, okay, well, it's still a campaign, or if this is a swing, or if you changed your opinion in the middle of the trade. So I'm kind of interested in what, because my tendency would be potentially to just put a stop under the whole structure and just let it run and see what happens. So clearly you approached it better than I would have, but I'm just wondering what your thinking was.
Yeah, there were 2 things at the point of exit. The first thing was just related to the stock itself. So we see a little bit of the increase of the supply. There are some supply spikes also. Like, look at this bar that is overcoming the resistance, and this is a good breakout. I mean, like, I don't have any problem with this, especially over this high. Good extension. Maybe less so over the buying climax itself, but there are some moments like this where we are producing lately, after the big move, we're producing some supply spikes that are stopping us, at least temporarily, or like this bar, into somewhat of a more pronounced reaction. So I was thinking slightly about this analog of the stopping action, and then supply is coming in, and supply is increasing here, but not as much as here. So reaction should follow, but not as deep. So, and that was kind of like a prelude to actually this trade. This whole thinking that the reaction is not going to be as deep. And in a way, I mean, like this was a correct analysis, right? Because the initial leg down was not that great.
Mm-hmm.
So whenever supply started to increase, I chose to exit the position and then said to myself, why am I not? Why don't I just re-enter it, after the reversal, which was this entry right here. And
Mm-hmm.
then obviously demand is diminishing a lot. And probably the mistake here was not to exit in earlier after this diminished demand, and probably the thought of this smaller reaction, because I was thinking sign of strength, some kind of LPS or deep backing up action, and then we're gonna go higher from here. And then yeah, so diminishing demand character, supply is coming in. I should have gotten out earlier, probably somewhere here.
Mm-hmm. And that's to some extent the signature, kind of the structure of a lot of stocks recently. So, the rotation that we're seeing is
Mm-hmm.
sort of out of this previous leadership into something
Yep.
new.
Yes. So rotation out of the growth stock was and is still quite significant. So we kind of have seen how they were getting rid of the growth stocks, let's say somewhere here back in October. Then again, some selling pressure here. You could see this from the volume signature. It is slightly more than, let's say, in this area right here, where we see the almost like an exhaustion. So from that point of view, Franz, I would be thinking like phase A just based on the volume signature, exhaustion and B, and possible C. So something like this. Here's our trading range. So I'm still very much bullish, long-term bullish on this. And maybe this is kind of like a second point of view. We'll have to figure this out
Mm-hmm.
and to see how the price is going to behave here. So if it starts going up, then we are potentially in phase C. So from that perspective, maybe closing the position again somewhat earlier, not later. And then that still would go to like, okay, well, do you see this in that moment that you need to close the position or not? Okay, well, let's go through the post analysis, and I would say let's do the post analysis for this non-trade. How about that, Franz?
Okay. Well,
So I would say
clearly you're
bias is
clear. You're,
definitely yes, because I was thinking of buying.
mm-hmm.
Timing is
um,
no, right?
okay.
Character,
Assuming that you didn't get in. Okay. Yeah. Okay.
yes. Yeah, I did not.
Character, yes.
Character was yes. I would. I knew that there's gonna be some kind of run. Point of entry, no. Stop loss, non-applicable, and then exit also non-applicable. So what does this
two
leave?
out of two out of four, 50%.
Yeah, that doesn't make sense a lot, right? 50% for the trade that you haven't made.
That you
But
didn't take.
I hope that you guys are kind of seeing what we are seeing here. I hope you understand why we're talking about this non-trade, because there are a lot of non-trades uh, that are the mistake. Usually we try to analyze something that has happened. Well, what about analyzing something that should have happened and has not has happened because you did not act on that? And I think this is such a wonderful example of that. So if we are expanding your thinking here in terms of the selection and execution, so that would be great. Okay, so some of the comments and lessons. So probably like urgency of buying and continuation of that. That would be something that I would be extremely, extremely interested in to revisit, develop a little bit more, and have the capacity to actually, act on that. So that is probably the most important thing, Franz, for me. What are your comments on this non-trade?
My comments are that I had another stock in this same group, Dayquo, on my watch list, and for some inexplicable reason, I never got into it. And every time I look at the chart, I kick myself. So this is a great analysis for me, and I'm sure for many of the folks that are watching our series that when the setup is there, even if you put a small position on, get into it and don't leave the money on the table, which is one of the big fears that we all have.
I think this is a
So
really great point. And we do talk about that in the classroom. So, and I'm totally spacing out here in terms of this advice. So thank you, Franz, for bringing this up. If you're in some kind of doubt, um, if you open a regular size position, or if you choose to oversize it right away, you're going to be in a very bad emotional place because it's going to bother you and it's going to influence the whole trade and the way how you behave with this trade. But putting on a small position size, that's awesome. That's a great idea because now you are committed and you are watching like a hawk. And then your mind starts thinking and analyzing the stock over and over and over. So in the next 3-4 days, where the price is still relatively, not far away from this urgency of buying, you could establish a full size here, and maybe even start oversizing it later on. So this is a great advice. So thank you, Franz, for that. So here it is. Here is that post analysis of a non-trade. And I would urge you guys to go into the history of your trading. Let's say just maybe for the last year or so. You don't have to go to that far away. And ask yourself a question. Well, I am post-analyzing the trades that I've made, which is great. But what about the trades that were there for me? I saw them. They were on my selection list, on my watch list, and I did not take them. So analyzing that is going to have a tremendous benefit to your selection process in general. And with that, thank you guys so much for watching. And until the next episode, thank you, Franz.
thank you, Ramon.